All right, everybody. So what I'd like to do now is go over why C setups, in my opinion, should be avoided completely. 9 times out of 10, you're going to end up taking more losses than you are wins. And I think that's the main point that I'm going to get across to you here. I'm going to show you 4 trades, 2 from yesterday, 2 from today. We're going to look at CAD JPY and Euro JPY from yesterday, and then we'll look at Euro NZD and GBP USD today. All 4 of these, when you go through the checklist that we teach at ASFX, all 4 of them qualify as C setups, but only one of them is a winner. So the question starts with, how do you determine of those 4 C setups, which one is going to be the winner? Because of course you don't want to take the 3 losing trades. The answer, so you don't have to watch the full clip, the answer is you avoid them completely, like I said. But what I'm going to show you here is how difficult it can be to try to pick that one, to the point where if you want to trade one C setup, I believe you should trade all the C setups in order to properly put statistics in your favor as much as possible. Because otherwise you're basically guessing 1 out of 4, 25% chance over the last 2 days that you pick the right one. I don't like my odds in that situation. 25% isn't high enough for me to feel confident in. So let's start with yesterday on CAD JPY, and then we'll move into today's trades. So if you look at CAD JPY, we qualified this as a C setup. The reason for it, as you can see in my notes, 3 things. These little stars here, those are the knocks. Knocks are things that are against your setup. Those are the things that decrease your probabilities. The first thing is that it is a swapping TDI. So you can see from the vertical line here, that's the changeover of day. It starts in the sell zone. Market sentiment is in the sell zone. It pulls into reset here at the 50, and then it ends up pulling higher into the buy zone as the day goes on. Now, it is in the buy zone more than it's in the sell zone today, but it still is a swapping liquid 50, so we have to call it how we see it. That's the first knock. The second thing is if you go back to yesterday's high set in the Asian session here, that zone of resistance is right above you when you would look to take this 3-candle A1 entry. So that's the second thing. You can see it in my notes. So now we have 2 knocks. The third knock is that this candle formation, if you look at it, is not 100% off the 21 EMA. And for a proper A1 formation, it needs to be off that 21 EMA. So this ends up being a winner even as a C setup. Like I said, they're not all going to be losers. This goes about 2.4R, up about 16, 17 pips with a 6, 7 pip stop loss. So here's your winning C setup. Now, when you look at this, remember the knocks. It's almost overbought. Not a serious knock, but it's important to pay attention to. It's almost overbought. Swapping liquid 50, the zone in the way, and the candle formation could have been better. Okay, that's the first one. Now let's look yesterday at Euro JPY because we were looking for that JPY movement higher. Here, and this is going to look similar to what you see in today's trades, here, 3 knocks. It's a swapping liquid 50, starts in the buy zone, drops into the sell zone, and then back into the buy zone. So I don't love that. The second thing is that you have bearish divergence right here in your way. If you blow up this RSI, you can see the RSI is falling. You can see price is rising. So when you're looking to read risk reward, you want to make sure you understand where that divergence line is because it could very easily just hit it, as it does right here, and come off of it. So knowing that, the risk reward on this setup is only 1R to that divergence line. And on top of that, if you go back to yesterday's high right here, it's showing you resistance to it already. And we know horizontal levels are so important. So it's important that we don't jump into a trade when we don't have good risk reward to that next level, unless that level is already being broken. Like if we had broken above yesterday's high and we were trading above yesterday's high to move higher, that makes a lot more sense than trading into the divergence high, into the zone from yesterday's high, and into the level we see resistance at already once today. So the risk reward here sucked. So those 3 things, the swapping liquid 50, the bearish divergence, the zone in the way of having good risk reward, those 3 things, as you see in my notes, make this a C setup. And how would this have worked out for you? It would have stopped you out most likely. Maybe you get out at break even. Maybe you get out at a small loss. It doesn't matter. This doesn't move more than 1R. You're probably not making a lot of money for sure. And you're probably taking a loss here or a scratch. So again, yesterday, 1 win, 1 loss. How do you pick? They're both the same. When you go through the ASFX checklist, they're the same. So how do you pick? You don't. You either take both of them, in my opinion, or you take none of them. That's how I handle C setups, because then I'm just flat. Instead of potentially taking this one and taking a loss and seeing this C setup on CAD JPY move higher. That's even more frustrating than just sitting flat and waiting for a better setup. Now let's carry that over into today. GBP USD had an A1 idea that did work out for a little bit of money today for Jerome and for James and some of the guys in the group chat. So here, Again, we have 3 knocks on this setup, very similar, kind of like an inverse. First thing you see is this white line I have drawn. It shows the RSI rising and price falling. That is bullish divergence. So that's the first knock. The second knock is the risk reward ratio to the divergence line to the low of day is very, very, very small. You can see it's less than 1R if it's going to hit the line and bounce off of it. So that's the first thing and second thing. The third thing is that if you traded this as an A1 formation, this body, no wicks, this body is the biggest bar of the day. It's 13 pips. This body right here is only 10. So that technically qualifies this A1 formation as overextended. And that's why I didn't take this trade. Now here, again, you have a little win. It goes about 1.5R and then it turns around. Not bad. But how do you determine if you're going to take this trade after yesterday I passed on both of them that looked identical to this, right? So that's the GBP USD idea here. The best thing about this trade today is the liquid 50, the market sentiment line, is in one zone all day. That's what we like to see. So that feeds the short move. But as you can see, it's a C setup. And what do C setups do? They chop and they normally don't run in your direction all day. And that's why this is coming higher. Now, today, you could have traded this, or the other thing on my watch list was Euro NZD. We were looking for longs here as a D1 idea. You can see in my notes. And that ends up, as you can see, coming lower. There was no money to be made going higher today. What are the knocks? You got 4. First, it is a swapping liquid 50, buy zone into sell zone into buy zone. Second, it's overbought right there. It hits the 70 value. Third, the higher time frames, the 4-hour and the daily, are not long biased. So that doesn't confirm the direction that you're looking to trade. If they were long biased, that could at least help you. But them not being fully long biased, that's a knock against the trade. And then the last thing, notice the 200 EMA is under the 800. The white line is under the blue 800. If we had perfect EMAs, the 200 would be above the 800. So right there, there's 4 knocks on this setup, and that's why I didn't take this trade either. Now, it tries to present another A1 entry here, but as you can see from my notes, it wasn't a proper formation. The RSI did not close through, and then we see it come lower as the morning has gone on. So right there, how do you pick today? Do you trade this one as a C setup, or do you trade this one as a C setup? They're both not great trades. So in my opinion, here after 2 days of trading, after going over these 4 trades, you guys should be able to see now why you want to, most of the time, in my opinion, if you're grading your trades like we do at ASFX, you want to avoid C setups. The last point I want to make when talking about this is that there's so many traders that don't trade with a precise system like we teach at ASFX. There's links in the description if you want to learn more about our courses. I'm not plugging the courses right now. I'm saying most people don't have a precise checklist that they use before they take the trade. So if you have a checklist and it can give you a situation where you read a lower probability trade and you know, this is the key part, you know that it could be better, CBB, it could be better, why take that trade? Over the last year, what's really been a light bulb moment to me, maybe 2 years, is the value in having language to identify and avoid certain trade setups. I think most people generate trade ideas and think that they have to take every trade idea that they generate, or they think that they're going to be right, which is even worse in every idea that you generate. Have some humility, be humble, realize you're not going to be right all the time. So if you can go through a checklist that's back tested and proven profitable, like we have at ASFX, if you can go through that and you get to the point where you say, this is a low probability trade, there's too many things wrong with this, it could be way better, why take the trade? Why put the risk on? And if you do, statistically, I would bet, I'm not a math major, but I would bet, just based on logic, that the statistics would tell you you have to take all of the C setups in order to actually potentially make money on them, because a good chunk of them, like you just saw, 50% of them are going to end up being scratches or losses. The other 2 might pop for you and you get a small little win. They're not even great wins. But how do you know which ones are going to be the wins and losses if you're still just using that same checklist? That works. It does identify B setups and A setups, but that doesn't mean it's going to do that on a week like this where you have a bank holiday on Monday and NFP on Friday. So it's like having that list is your safety net. Having that checklist to work through is your safety net to get out of potentially getting sucked into bad trades. Having language to avoid certain setups is a very powerful skill that most traders just don't have. And if they did, I think everybody would be using it, which is why I'm such a big proponent for identifying your setup, grading it using a checklist. And if it's a high probability, not a lot could be better, take the trade. If it's a low probability, like we've seen this week with these 4 trades on CAD JPY, on EJ, on EN, and now on GU, if it's lower probability, it's just not worth your money. If that makes sense, hit the thumbs up button for me so I know everybody understands my point here, because it's a big lesson this week and I want to make sure we drive it home.